Good morning and thanks so much for tuning into the Trade Setup with me, Niraj Shah. Well, did you know that the US federal deficit has reached historic highs, the largest since the Great Depression? The national debt for the US is up by 56% to 35 trillion since 2019. It's a staggering number, isn't it? But it's the US, so they can live with it. Anyways, let's take stock of the global news flow. The S&P 500 soared 4.7% for the best week in a year, aided by the Donald Trump victory. Tesla topped the $1 trillion mark in value for the first time since 2022. I tell you, one CEO has benefited by backing Trump is Elon Musk. Biden and Trump are going to meet in the Oval Office on Wednesday. It promises to be a historic one, if you will. And Trump asked Robert Lighthizer to be US trade chief. Why this is important? Because he's very protectionist in nature. So if you thought that trade tariffs might be different in Trump 2.0, I think you got to rethink again. It seems like an all Trump global news flow, isn't it? But that's what the markets are about these days. Well, the US markets did okay. I mean, quiet, but for the Dow, which was up about 0.59%, S&P 2 did okay. Futures flat currently. Asia is a tickle of red, if you will, but mixed, you would argue. I mean, China is a separate kettle of fish simply because the numbers that came out on Friday in front of the policy weren't the strongest, and as a result of which you would expect that the Chinese market and Hang Seng would have corrected. The implied open about 100 points lower, shouldn't surprise. Frankly, the trade setup, I mean, it's very difficult to trade the index in such narrow moves. And I'll give you an idea of how narrow the moves are on the back of what Nifty IT is doing. But be that as it may, just before that, look at the insurance stocks, which are likely to flatline after a moderation in the month of October. And therefore, look at bottom-up ideas, look at sectoral ideas as opposed to looking at the Nifty, to be very honest. CDMO could be a pocket that you want to watch out for, because the commentary from Divi's, Syngene, Lotus, all of them seem to suggest that they are in a good space, and therefore you want to watch out for. And speaking of Divi's, let's start with that one first. I'm skipping the earnings in focus because there are a lot of stocks to monitor in the session today. So Divi's Lab is the first one on my list. Revenues are up a healthy 22.5% at 2338 crores. More importantly, margins expanded 600 basis points at 31% versus 25. Net profit up 47% at 510 versus 348 crores. Now, I know it's an expensive stock, viewers, but I think the commentary is very solid. So Divi's, remember in Q1, the management had remained optimistic about sustained operational continuity in Q2 and Q3. I think that's what I wanted to say. Now, if that were to happen, and if Q3 is as strong as Q2 has happened, because Q2 did see operational sustenance, then expect about a 35 to 50% PAT growth in Q3 as well, which is very strong. I mean, the stock trades at what? I mean, some analysts actually expect an EPS CAGR of 27% over FY24 to 27. And on the back of all of that and what it'll do in Q3 and Q4, the stock probably trades at about 48 times FY27 EPS. The point is, viewers, that in these up cycles, stocks like Divi's have tended to gain multiples of over 70, 80 times as well. It's risky to give it, but that's what happens. So wouldn't be surprised if Divi's has a positive reaction today. Healthcare Global, other one. Revenues were up 14%, PAT up 93%, margins at 18% versus 17%. Strong showing, may do well, a bit of a thumbs up here. Epigral, surely a thumbs up. Revenues up 31%, margins at 28.5 versus 22.5. Net profit 114% higher at 81 crores versus 38 crores. I mean, find a foot wrong with this one in this quarter, and I'll be surprised. So very strong, should see a positive reaction. GE Vernova T&D, what a blowout set of numbers. Revenues up 58% at 1108 crores. The estimates were 963 crores. Look at the other aspects of GE Vernova. EBITDA margins 76 basis points higher, 18.5 versus 14.4% estimate. And net profit up 291%, 145 crores. The estimates were 98 crores. The estimates were strong. They beat the estimates handsomely. And Nuvama, as a note, when they have a target price of 2,000 because of many reasons. By the way, Nomura has a target price of 2,600. So the target prices don't matter, but the reasons matter. Let's quickly go on to the reasons. They're saying that there's a stellar order inflow at 5,710 crores, Order book, therefore, 9840 crores, 5710 crores. That's 2 times FY24 sales, or 3 times actually. The management remained optimistic about demand. They plan to invest capital for capacity expansion. Nuvama is jacking up the FY25 and 26 EBITDA by 50 and 21% respectively. This one will react positively. Watch out for Premier Energies, very strong showing, and the management will be live on NDTV Profit at 9:30. Revenues up 120%. Margins expand massively, 1068 basis points, 24.95 versus 14.26%. What a strong showing on margins, as a result of which bottom line up 288%. What a strong number by Premier Energy. It's a very expensive stock, but could do well. Sami Hotels, again, revenues up 20%, margin 34%, and net profit 12 crores versus a loss of 88 crores. The estimates were about 11 crores. So in line with estimates, or slightly better, but what a strong showing really by Sami Hotels. So do watch out for this one. Shipping Corporation of India, revenues up 32%, PAT up 4.7x, margins expand 36.7 versus 21.6. Blowout number. As also DOMS Industries, very good number, 19% uptick in revenues, PAT up 43%, margins 18 versus 16.5, could do well. Now, what will not do well? You thought, in case I'm biased, what will not do well? Asian Paints, revenues down 5.3%, margins at 15.44 versus 20.24, net profit down 44% at 694 crores versus 1232 crores. Now, paint companies are pointing a good picture for the quarters ahead. Decorative retail sales may do well. Demand is expected to improve gradually. But brokerage is not too constructive on paint companies. So watch out. Asian Paints may see a bit of a downtick in the session today. Tata Motors may see a bit of a downtick as well. Revenues down, margins lower, PAT 10% lower at 3450 crores versus 4805 crores. UBS maintains a sell, target price lowered to 780. Very quickly, Orient Cement, weak numbers, could see a correction, but I must tell you, the alert is that Ambuja's open offer for 26% stake is at 395. So watch out, the stock is already at 336, so may not correct too much. RT Industries, horrible numbers. FY26 EPS estimates have been cut by an average 45% by the street to 11 or 12 rupees. So this one will correct. CE Info might correct. Ola Electric might correct. So watch out for all of these. Thanks so much, viewers, for tuning into the Trade Setup today.